So my account has taken a big loss today, and it's because of the S&P 500 and Tesla. So we'll get into that in more detail in a minute. We'll go over what my account is doing right now, the position that I'm in. Let's get into it. So the only trade that I made today was for my 30-20-10 strategy. So you can see I did a 50-70 put that I'm selling with the $10 wide spread. I'm going to be doing a video on my 30-20-10 strategy coming up, so it might be over the weekend whenever I get that done. I'm new to the strategy, so I haven't done it all the way through, but just want to kind of give you an update on what I'm doing. So I didn't make any other trades today, and that's because my buying power usage is above 100%. You can see right here, I'm at 106%, almost 107% right here. So because my account is going down and the strangles that I have on, my buying power usage has gone up. I'm not able to make any trades. I don't have enough cash to make any trades. And my plan is to continue to do that 30-20-10 strategy every day. So I need to make sure that I have enough cash on hand. My plan is to close positions to be able to feed that strategy. So I looked at my corn today and it's at 24 days until expiration. So if I need to, I can close that position, even if it is a little bit early. It is close to 21 days. I'll be closing the position at the end of this week anyways. So if I have to liquidate that, that'll free up nearly $2,000 so I can continue to do my 30-20-10 strategy. So let's take a look at Tesla's move today. And I want to show you that it's not too crazy. We have something we can compare it to. So I've got the hourly chart for both Tesla and the SPX right next to each other. And you can see they're both down. The candlesticks look very similar. Now, we do have at the end of the day, SPX did have a push back up. We can see that we had a drop, and it was a market-wide drop. Tesla came out with their deliveries, and I believe it was an upset, but nonetheless, we can compare it with the overall stock market and see that it's not that much different. And the stock market overall is down, I believe, because of the yield rates on treasury bonds. People are pulling money out of the stock market and putting it into bonds. All right, let's take a look at SPX here, and we can see that we had a big drop here, right? But we are touching that 21 EMA. And that was to be expected, right? See how long it's been since we hit that mark? We've pulled back here, and the last time we did that was February 21st. And then before that, it was February 13th. So we were due for a pullback down to the 21 moving average here. It was just a matter of time. We can see that we haven't touched that for a long time. We've been up, so we are due for that. I don't think that's anything out of the ordinary. That's nothing to be alarmed about. And what's good about it here is that it's a wick. And so we see buying pressure going back up. So we want to see that. We want to see that healthy pullback. We want to see strength going back up. So that's a good thing to see. Even though it's down overall, we are seeing it still stay within this channel, staying above the 21 EMA. Now, if it does go below that, we would be in trouble. That means we'd be probably heading down to the 50 moving average, and who knows what would happen there. I don't believe we have anything to be alarmed with, and I'm going to continue to do my 30-20-10 strategy on the E-mini S&P 500 futures and continue on as business as usual. So let's see what the damage is today. You can see I'm down $1,100, almost $1,200 in a single day. Tesla took $543. The E-mini S&P 500, I was down $290 overall in the day, nearly $300. And then I was down on my copper and corn and wheat. So let's take a look at copper. We see that copper is starting to change direction. It's starting to curve up here. The other thing that I'm seeing, though, is that we're seeing pressure going back down. We're seeing these wicks. And whenever we see these wicks, that's a sign of weakness. And so even though we are trending up, I am expecting that this price level is going to stay pretty steady around this level. So we'll see what happens here. I believe that overall that we're going to see the IV rank to start going down, and that I can start collecting a profit on this. The concern that I have with my corn position is that I only have 24 days, so I only have until the end of this week to manage the position, and it's not doing as well as I was hoping. I was hoping to be out of the position by now. You can see as the price goes down, my position also goes down. What I need is a good, strong candle, like last week, where we had a strong candle going up. I believe that I'd get my 50% profit if we see strength going up. And the same thing with wheat as well. I need the price to go up toward my call and even out. And I don't want to have to make an adjustment, but that's what I'm looking for in the position overall, is to even out. What I'm talking about whenever I say even out is that I'm looking for this price to move closer to 570, and then that's going to get my profit where I want it to be, right? So I would be up $70 here if the price was at 570. And that's my optimal price to get to my 50% the fastest. So over time, we can see that that improves. So that's what I'm looking for in the wheat position. The benefit with the wheat position right now is that it's at 50 something days. I think we're at 52 days until expiration. So I have plenty of time to be able to manage this position for the price to work in my favor. No hurry. So it was a really rough day in the markets. I lost nearly $1,200. Yesterday, I lost around $400. So it has been a tough week, but it's due. I am due for a pullback. I'm due for some losses because these last couple weeks have been a crazy green. So I've made roughly $4,000, $4,200 in a matter of 2 weeks on my $15,000 account. And so I knew that this day was coming. It was just a matter of how much. So I think so far we're not in the worst case scenario. And I think it's just a matter of time before we start seeing improvements on that net liquidation that I've got. So right now I'm trading around 17,900. So we are down, but up on the long-term view. So I think we're still in a good place. No really big issues right now. We just need to start seeing some recovery and be able to start closing positions and opening new ones. So I'm a new options trader, and my goal is to get a 50% return by the end of this year. If you want to join me on that journey and learn along with me, hit that subscribe button. And if this video helped you, hit that like button, and we will see you on the next video.